Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, April 6th, 2009. Well, we are seeing a sell-off on Wall Street today, folks, and it's a nice one at that. You're basically seeing the indexes give back about 1.5% to 2% across the board, with the Dow lower by about 125 points, the NASDAQ lower by about 33, and the S&P 500 down about 16 points on the day. Now, the real key is this, guys. We all know how much the markets have run up. Those of you that are premium subscribers to our services and our nightly videos of 25 to 30 minutes in length where we go in depth know what we've done in position-wise and how we've positioned ourselves to take advantage of this. But again, it's a beautiful move down to today for those of us that expected it or are making money off of it, and that's fantastic. Now, couple odds and ends, guys. What went on today that caused this? Then we're going to get into the hardcore technical chart analysis. We're going to look at trend line analysis. We're going to look at price, pattern, time. I'm going to show you right currently why we hit a key level, and you can see it on your chart right now, and you're backing right off of that level. So these are all things I want to cover. But first of all, again, as I said, let's talk about what went on today that caused a little bit of a sell-off. Well, you had Geithner making a couple comments over the weekend that were construed as possibly negative to the markets. Now, the comments basically revolved around the Treasury Secretary here saying that he may be willing to remove, or the government may be willing to remove, certain CEOs of bank stocks if things get worse. Needless to say, the bank stocks are not taking kindly to that, as the government seems to be meddling in business again. So that's one thing. The other thing was a downgrade from a key analyst on the financial stocks. A bunch of the financials getting downgraded to underperform, some of the regional banks getting downgraded to sell, and that is taking some wind out of the sails. In addition, the thing you have to remember, guys, we're very, very overbought at this point, or at least we were this morning. Having taken that into account, you have to anticipate a pullback, and that's exactly what we're getting today. Now, on the intraday charts, I've highlighted two different levels of trend lines. Number one, you have the straight trend lines across, which are in pink or light purple here, as you can see. In addition, I have the sliding trend lines, which are angled in green. Those are the ones that are a little more important in my book because they're the ones that are much, much more imperative to this market. And you'll notice that as you learn trendline analysis, which is what we highlight and teach in the Research Center, along with giving our key guidance on the markets every evening in the 30-minute long videos, is that this is key. And the trend lines that are angled are very, very important to understand, as well as the other ones. In addition, on this chart, we also have the 20 moving average in yellow. Orange, we have the 50 moving average, and the red down here is the 200. Now, the beautiful thing about this, and I'm going to start getting into the hardcore stuff here, so be ready. So what I'm really showing you here, folks, is our key levels. These are all key levels on the chart, everything you have to be paid attention to. I'm not as focused on the moving averages because everyone uses them. And one thing that if I've taught anything to our key subscribers and our premium guys and our traders in the chat room, it's that you have to understand that when everyone else uses something, you don't want to use it. It generally won't be as effective. Now, it'll still work, and the moving averages do work, but it's the trendline analysis lines that are really going to be key to you making money and being ahead of everyone else in the market. Now, what you can see today, guys, we got a nice little gap down in the markets. The markets did gap lower decently, and what you can see here, see this green trend line that's sloping up? That was the lows from here, and then actually notice how we gapped right on top of that and closed below. What you have to take from that is a possibility of more downside. I always look for the first candle and whichever direction on a key trend line it closes for an inkling on where the rest of the market will head for the rest of the day. And what we are seeing right now is, notice the first 10-minute candle closed below. To me, that tells me watch for more downside today. In addition, knowing what the markets have done over the last 3 to 4 weeks, you have to be looking for a pullback. So what I want to do is show you where I got this trend line from, and so you guys can kind of learn. And again, what our role here is not only to guide people and our subscribers and our viewers, but also to educate. We're big on education. We'd much rather teach you guys how to fish rather than just give you a fish. And that trend line that I want to show you, see the low here on the 1st of April? Take that low, connect it to the secondary low right here, and just extend it all the way up. And you're going to see that there are two key trend lines there. All right, one of them slides up and gives you the top on on Friday, the exact top. Notice how that price went right into it. The other one here, let's show you the other one. The other one stretches back even further to the gap on the 30th of March, and you connect that. Notice how you want to take the gaps. The big gaps are major ones. You want to take it to the secondary high here on the 31st and just extend it all the way up. And sure enough, they come into play. One is a key one here and gives you the top of the market. One of them here gives you the breakdown of this market. Notice how it connects to the lows right here, which bounced off Friday. Now, when you know this line gets taken out, you're more than likely going to see some more downside. And that's exactly what we saw today, folks. So notice how you closed below, started to sell off further, got a nice little bounce, but notice how the bounce went right back up, pierced, and closed above, and you went right into key trend lines here. The analysis level, we had this one trend line right here at the 83.50 level. In addition, you have the 50 moving average there and the 20. That's a lot of resistance. So what you look for in the next candle is confirmation. Confirmation is something that's so imperative for every trader to watch for. Otherwise, you get whipsawed out of trades. And notice how we didn't get a secondary close above this line, above the high of the previous candle. In fact, it was a reversal candle, which is even more bearish. You have an engulfing candle to the downside here, which closes back below this green trend line. That tells me, again, we're going to go lower. That's confirming the first move about below. So you confirm the second move here by an engulfing bearish candle, and before you know it, you're selling off. Where do you stop? Your first support line to the downside, which again, and I can show you where I got these levels from, folks. They're all key levels. You can see some of the levels go all the way back over here to late March. Alright, you can see from key levels in late March, and they extend all the way through here and come through. In addition, this gap, this is a key gap window. See the gap right here? We gapped up on the 2nd of April. From this level to here, you have to take that low gap and just draw a straight line across. Notice how the market sells off here, bounces right off of it. That tells you that that's going to be a major level to come into play, and sure enough, this is that same level right here. You come down, bounce off of it, come down again. You try to break it, but you really don't. You get a nice little move up, and then finally you break to the downside. Once that's broken, you go to the next key major support line, which is right here at 82.50. Then the next one at 82.30. 82.30 is a very, very good support in this market, which you're getting a solid bounce off of. Now notice how your retraced bounce took you all the way up to this upper trend line, which was the major breakdown at 82.75. What was 82.75? That was the gap window resistance. Again, I'll show you that 82.75. Scan back, scan back. What's this price right here? 82.75. Boom. So you know when you break a key support line, on the way back up, it's going to be resistance, and that's exactly what this is proving here to you as you guys are watching this video. So not only do you move back up, but you also have your 20 moving average moving down, which slides right into that. That's confirming that move. So notice you had a 1-bar pullback. Now again, you're trying to push back up. What you want to see is whether or not you can recapture. If you recapture this 20 moving average, you may have a shot moving up to the 50 moving average right here. That would be first decent resistance. If you break that, then you could actually make a move to 83.50. In my opinion, this market continues to need a little bit of a pullback, so we'll have to continue to watch that and see what happens. I'm not sold on this line breaking because it is a very, very heavy resistance. We'll see exactly towards the end of this video whether or not it does, or we'll look at it later tonight in the video for our premium subscribers. Alright, we'll analyze all the key stuff, go over the daily charts, the weekly charts as well, for those of you that are more investors and so forth. But that's what you're really going to be watching now, folks, is where do you go in this market? Because if you break these lows right here at 82.30, 82.30 is a key break. If you break that, you're going right to this 200 right here, and then after that, you're going right here to 81.40. 81.40, where do I get that number from? Gap fill from this gap. So the 82.70 level, 82.75-ish level, which was that key level we're hammering on now. This is current price right up against this resistance now as it was support. If we do break this lower support line right here, you're going down to the gap fill at 81.40. Alright, that's after breaking the 200 and piercing it. So watch these levels very intricately, guys. This is a big, big deal. Again, notice we're starting to push above it, but again, we have to close above it, and then you need to see confirmation with another candle. If you do get that, then there's a small probability you'll move up to this 50 moving average right here. Again, if you do not confirm it, you got to anticipate a retrace and possible touch of the lows of the day. This will be very good support at the lows of the day. If it does not hold, you're going right to the 200 and then gap fill right here at 81.40. Those are your intraday levels to watch. Let's look at the 60-minute chart now. Alright, here's your 60-minute chart, and what the biggest things I can tell you right now is why are you hitting support here? Well, just go back right here. See the high area right here? This is good support as it consolidated before gap down. Now you're right back testing that level again. What do you want to do? You want to drag your cursor or your trend line right across. Look at that, folks. That's exactly why we bounced off this level. This is a very, very good support, and it's showing you beautifully on the 60-minute why it is. Again, as I said, if we break this level, then you're going to basically go down to this level down here, which is gap fill. That would be my target on the 60-minute. Notice the gap. Here's your gap level. This is where we're currently hitting on top of right now, by the way. See, you have your gap window right here. Now we're hammering to the upside on that resistance. All right, guys, come join the Research Center at InTheMoneyStocks.com for the best education on a technical basis that you can ever get, and also the guidance we give. Take care.